If you think absorption is just large orders hitting the tape, then this video is going to save you money. Most traders lose trade absorption because they enter before price actually proves anything. In this video, I'm going to show you real ES and NQ trading examples and the exact confirmations that I wait for before entering into absorption trades, so that way you can make real money. Here is picture perfect absorption. 10K on the sell side, 3.9K on the buy side. We only extended 6 cents. Hey guys, it's Anthony. Welcome back to the channel. In today's video, we're going to go over some examples of absorption compared to continuation, what signals to look for on the footprint chart. And if you're new here, I post educational trading content on how to trade futures, how to trade prop firms, and how to use order flow. What we're going to go over is the footprint chart on TradingView, just because I think it's the most easily accessible. I personally rely a little bit more on the NinjaTrader footprint charts. You can pay about $50 a month for either the order flow on TradingView or the order flow on NinjaTrader, and they both work great. I like looking at SPY and QQQ better on TradingView, and I like looking at the futures ES and NASDAQ on NinjaTrader. For now, let's look at some examples of what to look for when you want to see if you're going to be absorbed or not. Essentially, on absorption, you're looking for moves at high of day where lots of buyers come in, but price fails to extend, and then a sharp reversal happens. And when you see this, that's a characteristic of absorption, and vice versa. If you're falling, if you're near lows of day and you see a ton of sell orders come in without any extension lower, and then there's a sharp reversal with new orders coming in, then that's absorption. There's a bigger player that we can't actually see their orders come through, and those are huge whales that genuinely move the market. So that's why absorption is such a powerful response if you're able to identify accurately. On the left, you see SPY, and the right, you see QQQ. We're going to use Friday, this past trading day, as an example. These are 1-minute candles. You can see the 9:30 a.m. candle here. On the right side of the candle, these are all orders that came in at the ask, which are typically buy orders if they're market orders. And then on the left side, these are all the orders that came in on the bid, and those are typically sell orders, sell market orders. What you want to look for is a ton of orders come in at the ask while price is failing to extend. That creates an imbalance. And then you want to see other orders be aggressive on the sell side if we have seen absorption. So I'm going to show you real quick. I like to identify absorption as a large amount. Typically on SPY, it's about 10K on a 1-minute candle. If you have 10K or more orders, and then it's a 2-to-1 ratio of the other side without much extension, that's like the first glimpse of absorption. So where I see this is the 9:36 candle here. So you can see right here, there's 15K on the ask, and we only went another 10 cents higher, literally 10 cents higher, and then we reversed. And you can see at that same price point, there's only 4K on the bid. So there's 3-to-1 ratio of orders that came in on the buy at high of day. And then we had large sell orders come in compared to the buys. That's showing a clear sign of reversal. You take a short in the reversal and you get a move out of it. Usually when you see absorption like this, the easiest first target is low of day, if it's a high of day absorption, and it's a really strong example. And then you can place a stop either just above the orders where the absorption came in, like a little bit higher, or you can place it at high of day. So this is already a 2-to-1 ratio, and we go ahead, we take out low of day, get some large buyers come in, and we actually trend down way farther. So if you got out first target at low of day, you hit the 2R, then you move your stop break even, you would have got stopped out break even, and then it kept going for a large amount. But the whole point of this video is just to help you identify what's absorption. Let's take a look at QQQ. Let's see if we can find absorption on QQQ. And let me preface this real quick. I like to use SPY or ES better for absorption. I like to use QQQ or NQ better for continuation. So NQ, typically when large orders come in and it moves very aggressively in one direction. You'll notice on SPY or ES, when large orders come in, there's a lot of mean reversion, right? You see there's a move and then it comes back. There's a move and then it comes back. On NQ or QQQ, there's more volatility. So large orders come in and it pushes very aggressively. So I don't really trade absorption at all, to be honest, on QQQ. But if you wanted to, I'll just show you an example. Very similar kind of thresholds. I want to see at least 10K come in. I want to see at least 2-to-1 ratio of buys to sell orders. And I don't want to see much more than about 20 cents of extension on QQQ. And the key thing to remember is you want to see absorption at like double bottoms or new low of day to take reversals for long, or you want to see absorption at the top, like double tops are really good for that. If you see a double top, you see absorption, you catch the reversal, you target the low of day. These are things that work, right? So here, right off the bat, I can actually see right here, I'm looking at this. You can see 2x. It's almost perfectly 2x. You see 20K on the buy and you see 10K on the sell. We extended exactly 20 cents. And then we saw a reversal of large orders come in on the sell side, and large orders being that we saw this 2K to 0 and a sharp quick move down. So we basically created an imbalance on the opposite end. So once you saw this confirmation of 2K to 0 and price moving through that zone, you would place your entry there, target the low of day. Stop would be just above the absorption node. And there's your 2-to-1 ratio. Then you could have went to trail and you would have been stopped out break even. So now let's go ahead and look at the previous day. And we'll look at another day and just look for absorption again. So we're going to go back to Thursday, January 15th. All right, here we are, Thursday, January 15th. If you don't know yet, how you do this is you go to the candles and you click on volume footprint, and then it changes the candles to volume footprint. That's how you're able to see all the orders come in, and you'll have to enable obviously like live market data. You have to pay for some bundles of some data on TradingView. And like I said before, it comes out to about $50 a month. On the open first candle, you see massive sell orders came in, pushing price down on SPY right here. What we're going to look for is absorption. So we're going to look for like that 2-to-1 ratio, minimum 10K without more than 10 cents extension on SPY or 20 cents extension on QQQ. So you see this right here. This is large buy orders at low of day. And you can see this right here, 13K on the buy side, 4K on the sell side. That's not absorption. That's just large buyers coming in. The reasons why this does not work is because it's not with the trend, right? On the open, we had massive sell orders come in. So the bias should be short. The reason why this move failed is because there was bigger sellers that initiated the move down. Therefore, when we had buyers come in, they just got shot down again because of those original sellers that shot down the initial move. Here is picture perfect absorption. 10K on the sell side, 3.9K on the buy side. We only extended 6 cents, which is great. And then we saw buyers come in, but I wouldn't be confident until we saw this 4K to 0. So once we saw 4K to 0, then I'd be going in long. Stop loss again right below that zone. You could target high of day. The reason why I don't like high of day in this scenario is because there was such massive sellers up here. But you could go for the 2-to-1 R and see if it plays out. It actually exactly plays out to the tick. So the stop loss was 22 cents, just below the zone. And then 45 cents is to 2R. So we hit that and then we actually get stopped out. Makes another new low of day. Look what happened after we hit the target. There was literally absorption again. 12K up here on the buy side. There's 4K on the sell side. And we shot back down. Could have entered short here on the 4K to 1K. Wrote it back down. So if you took the opposite trade here, obviously I don't take entries this often. I'm only allowed to take like 2 entries per symbol per day, and a maximum of 3 entries in one day. After I've taken 3 entries, I'm done. I also don't take a second entry that soon, so I wouldn't have even taken this trade. But if you did, like I said, you would target the first target would have been low of day, which is about 1.5 R. And then you'd hit 1.5 R. So you'd have 2 R on the upside, you'd have 1.5 R on the downside. Again, this just goes to show how good the absorption works on SPY. So this is an example of absorption I would not take. You see QQQ here. We're not near high of day, and you can see there is 16K on the buy side, and there's 5K on the sell side. We had a lot more than 20 cents of extension also, so it wouldn't even matter. When we're looking at absorption, I like to keep in mind time, location, and volume. These are the things that are important to take trades. If you see absorption during a low volume time, you may not get the move that you want. If you don't see enough volume on the absorption, even though the time is right and the area is right, you may not see a good enough move, right? If you see absorption of the wrong area, it could just be a failed reversal and rejection. So that's why you need to take in consideration time, price, price as in like price action. So price movement with the large orders, so volume, and footprint chart. You want to see this all on the footprint chart. We saw absorption because there was 9K on the bid, there was 4K on the ask. Not enough extension to the downside, which is awesome, but then we didn't see the follow through of the buy orders. This 9K to 6K doesn't count because sure, there was buy orders, but there was large sellers with it. It wasn't an imbalance. We want to see an imbalance following the absorption. Didn't see that. So we had a reversal, came down, made another new low. You would say this is absorption here. 18K to 4K looks awesome, but we went from 64 to 97. So 30 cents. We went a little too high for what I like, too much extension, but you know, obviously it still worked great. Wasn't really able to meet my criteria. So it wouldn't have given me an entry here. Here's another example, but too much extension. So 11K to 0, there's a ton of selling. And then we had buying on the flip side come back up, but too much extension again, and I wouldn't have taken the trade on the January the 15th. So I'm gonna keep this one a little short. I gave 4 examples, and I hope you now understand how to differentiate between absorption and continuation. I gave a lot of criteria on the absorption I look for on SPY, the absorption I look for on QQQ, and also why it's better to actually focus on SPY for absorption than QQQ. You'll notice in your back testing that you're going to see the same. Let me know in the comments down below. Like, once you do this back test, go ahead and look back and just look at all the days, look at all the volume that came in, and look at the absorption on SPY versus QQQ. Which one do you see more reliably happen and actually reverse and confirm? Let me know in the comments down below. Subscribe for more videos just like this one, and give this video a thumbs up if you appreciated it. Thanks so much for watching, and I'll see you in the next video.